Hi everyone, Michael here. In this video, I'm going to be going over how the US has never been closer in modern history to losing its world reserve currency status. And I know we've all heard the videos, the dollar's going to die, the dollar's going down to zero. But here, I'm going to show you the facts that we've never ever been closest than right now. And when the US loses its global reserve currency status and all the privileges that come with it, so too will the empire, like every other empire in history, will collapse. In this video, I'm going to be going over the statements and huge amounts of data and facts and charts on why this is going to happen, and the statements from Stanley Druckenmiller, who is a legendary hedge fund manager, and he gave some amazing insights on why the US is going to lose its world reserve currency status, and he also goes over the crazy, reckless policy from the US government and Federal Reserve. Okay, let's not waste any time, let's get right into it. So as you can see here, Stanley Druckenmiller says the Fed is endangering its global reserve currency status. Okay, so let's have a listen to what he's got to say about how the Federal Reserve is playing with fire. When they play with fire, we're the ones that's going to get burnt.
Certainly the most radical policy by a long shot that I've ever seen relative to the economic circumstances. Let's not forget that Ben Bernanke at the peak was doing $85 billion a month. We are now back to normalization on GDP. We're above trend on retail sales. I can't find any period in history where monetary and fiscal policy were this out of step with the economic circumstances. Not one.
And listen to this, everyone. I couldn't agree more. He said, the Fed's insistence on holding interest rates down and buying trillions in bonds, even though the markets are thriving and the economy is booming, is a long-term risk. And that's completely right. It may seem great now that, the stock market's booming, the housing market's booming, and there's all this spending. But what they're doing is pulling forward demand from the future. So while we're having a boom now, what happens when all that demand has been consumed and all that forward demand has been brought forward? Then that means in the long run, we're actually going to enter into what's called a lost decade. Because after we finish this current economic boom and the stock market boom, housing market boom, what tools are the Federal Reserves and government going to be able to do to keep the bubble going? Because they've already dropped interest rates to zero, they've already pumped trillions of dollars in, they've already taken on huge amounts of debt, they can't really afford much more debt. And listen to this, everyone, and this is really powerful, and I completely agree with this. I can't find in any period of history where the monetary policy and fiscal policy were this out of step with the current economic circumstances. And that's completely right. The economy is booming, the stock market is booming, the housing market is booming, but the Federal Reserves keep saying, oh, no, we need to do more, we need to create jobs for the little guy. Well, the job's already there, people just don't want to take it because they can make more money by getting money from the government by doing nothing. And they keep saying we want price stability or we want inflation. Well, we've already doubled their inflation mandate. The CPI came in at 4.2%, so what more do they want? But they keep saying, no, we've got to keep the money printer going. We have to keep interest rates at zero. We have to keep making progress when we already know they've made huge progress. But keep watching because I'll get into why they really can't stop the money printing and why they really can't lift interest rates.
In 6 weeks last spring, we did more QE, more purchase of treasuries than we did the entire time, the 9-year period from 2009 to 2018. Frankly, Joe, I don't have a problem with that. We were in a black hole. No one knew where we were headed. What I have a problem with is the Fed is expected to do $2.5 trillion of QE after vaccine confirmation and after retail sales reach trend and we're above trend.
Everyone, that's absolutely crazy. Did you hear that? The Federal Reserve has done more quantitative easing. They printed more money in 6 weeks at the start of the pandemic than in the whole time from 2009 to 2019. And that's why I keep saying that this money printing has a law of diminishing returns. And every time they have to respond with quantitative easing to a recession or a financial crisis, they literally have to 10x whatever they did the last financial crisis. So in 2008, they bailed out the banks and they gave about $700 billion of taxpayers' money. Well, in this recession, they've pumped 10 times that, about $7 trillion of QE. And as he mentions here, they're not slowing down. They're still going to continue quantitative easing at a rate of around $2 trillion throughout the rest of the year. What the heck are they doing? They must be held accountable and they must be stopped before they overheat the economy, overheat the markets and make wealth inequality even worse. And he also says here that the policies in heavy debts and deficits they support will threaten the dollar's standing as a world reserve currency. And why will that happen? That's because with the amount of money they're printing, with the amount of debt they're taking on, people are starting to lose faith in the US being able to repay the debt, and they're also not wanting to buy or store US dollars because they know that the US dollar is rapidly losing its value. So it says here, if they want to do all this and risk our reserve currency status, risk an asset bubble blowing up, so be it. But I think we ought to at least have a conversation about it. And that's right. The Fed is saying, look, we're not even going to talk about, or we're not going to think about thinking, or we're not going to talk about talking, or talk about thinking, or thinking of talking about lifting interest rates or tapering quantitative easing, when we all know now is the time to have that conversation. And it's going to be very interesting to see what Jerome Powell has to say at his next meeting, since the new inflation data and the economic data and the retail sales have come in red hot.
First time in your career you think we lose reserve status at some point?
I'm comfortable with it. That's my central case. As you know, Joe, I can change my mind. But yeah, you said that to some extent the Fed is enabling the fiscal transfers. It's not to some extent. They couldn't be doing this without the Fed. The Fed is monetizing their activity. I mentioned all the QE after vaccine confirmation and retail sales. We've had 850 billion of direct transfers. 575 billion of them came after retail sales were above trend. 575 of the 850 billion. I'm old enough to remember the bond market vigilantes. I used to be one of them. Without the Fed buying, I don't know what the exact number is. I think it's 60% of all the debt issued. The bond markets would be totally rejecting this. So they are enabling this massive expansion in fiscal policy. And the problem is, if you end up getting inflation, and frankly, even if you don't, the debt is going to be so big. You remember I did my entitlement talks 8 or 9 years ago. That's all happened except for one thing, the interest rate level. So we're right now in the crux of when the baby boomers accelerate in terms of getting Medicare, Medicaid, Social Security, that stuff. Right as we're doing that, we just put 6 trillion of new debt on. Again, all enabled by the Fed. These guys could not be doing it. Bond rates would go to a prohibitive level.
So everyone, as we just heard there, is he used to be a bond investor when yields were decent, but now nobody wants to buy bonds. So the Federal Reserve is literally the only one in town, or one of the only few in town, which are buying US Treasuries now. They're buying up 60%, he said, of US Treasuries. And I think as time goes on and the debt gets bigger and people start losing more and more faith of the US being able to repay the debt, what's going to happen eventually is the Federal Reserve will have to monetize the debt. That's where the government issues an IOU, creates debt. No one wants to buy it because they think the value may go down, or the yield's not good enough, or the US may not be able to pay it back. So the Federal Reserve is going to have to go out there and be the only and last buyer of resort and buy up all the debt and monetize the debt.
Okay, and they're saying if 10 years go to 4.9%, which is their normalized projection, the interest expense alone will be close to 30% of GDP every year. That's basically what we just spent on the COVID emergency in the last year. There is no way we can afford to have 30% of all government outlays be toward interest expense. So what will happen is the Fed will have to monetize that. When they monetize it, I believe it'll have horrible implications for the dollar. And that's why I said in that speech, yes, that I think it's more likely than not within 15 years we lose reserve currency status.
Well, everyone, that's crazy. So if people do start dumping bonds, or if interest rates do go back up to a normal average rate of 4.5%, that means the interest the government will have to pay just to service the debt, not to repay it back, but just the interest alone, will be 30% of GDP. That is absolutely insane. And that's going to absorb huge amounts of productivity for the US. And that's ultimately when the empire will fall, because the US won't be able to invest in its future. All its money is going to have to go to repay the debt, and we all know that's deflationary, and that's really going to put a dent in the US being able to maintain the #1 global financial superpower.
Last spring, in the midst of an equity market meltdown, and I've been trading for 40 years and I've never seen anything like this. Right in the middle of an equity market meltdown, the bond market went down 18 points one day. And everybody thought it was macro traders like me and others that were rejecting the implications of the CARES Act. The Fed did a deep dive, and by hindsight, foreigners sold $1 trillion, of treasuries overnight as we were proposing the CARES Act. They've continued to sell treasuries ever since then. Why is that important? Because for 20 years, treasuries have been the go-to asset of foreigners to hedge global portfolios with. In every case, whenever you had a problem in the equity market or in the world economy, they fled to treasuries and they fled to the dollar. Last spring, that was violated. So since then, they've continued to sell treasuries. So what we've gone from is for 20 years, an average flow of $500 billion a year into treasuries from an outflow out of treasuries. So when you have a $700 billion current account deficit, our estimate for the year, you need capital to flow in to offset that.
Did you hear that, everyone? That is absolutely crazy. Foreigners during the peak of the pandemic sold $1 trillion of US treasuries. And that is why the bond market fell 18 points and the money markets completely froze up, because everyone was selling off the so-called safest asset in the world and everyone wanted cold hard cash. And if you look at this graph here, we can see the foreigners that hold the most amount of US treasuries. And as you can see here, number one is Japan, holding $1.2 trillion worth of US treasuries. And in second place is China, and they're holding $1 trillion of US treasuries. And if this trade war continues to accelerate with China, one tool they could use is, imagine what would happen if they dumped this $1 trillion of US treasuries right when inflation was running hot and the Fed says, okay, we're going to start tapering our quantitative easing. Well, if China dumped all this debt, the Federal Reserve will have no choice but to go out there and gobble it all up. And this means bond yields would spike and the stock market would start plummeting right away. So it says here, and this is absolutely crucial, if we're going to monetize our debt and we're going to enable more and more of this spending, this is why I'm worried now for the first time that within 15 years, we lose our well-reserved currency status and all the benefits that come with it. Because what you have to know is the US right now is abusing their well-reserved currency status. If another country took on huge amounts of debt like the US is doing, all their currencies would plummet and the interest they pay on their bonds or their treasuries would spike because people would lose faith in them being able to repay. But because the US has a well-reserved currency status, they've got that privilege and they've got that trust and that faith. But once that trust and faith is lost, that's ultimately when this whole system comes crashing down. But listen to what he's got to say on why it hasn't happened already.
Very simple. Who was the biggest beneficiary of COVID? Obviously, the massive digital transformation companies, Google, Microsoft, not so massive, but Zoom, those kind of names. What country dominated in terms of those names? The United States of America. So the $500 billion outflow out of bonds was offset by a massive inflow from world central banks, from sovereign wealth funds into our equity market. By July, that had become pretty much in the market. The relative prices had gone up, and frankly, the vaccine profile was starting to look better. So that is when the dollar peaked, as that offset started to diminish. And as you know, Joe, the vaccine tends to cause a rotation out of growth stocks into value stocks. Our big advantage over here are the growth stocks. So that's why I think the pressure on the dollar is going to continue.
Wow, so that's huge, everyone. And that's a very interesting insight to why there's been so much capital that's flown into the US, even though there was huge amounts of capital outflow out of US treasuries, is because the biggest beneficiary of the pandemic was all the tech stocks. And like he said, all the big, huge tech stocks in the US. But now that we've had the high growth tech stocks boom and the tech stocks are starting to sell off, and now the investors are starting to look for value, well, there's not much value in the US, and there's a lot more value outside of the US for value stocks. So there's going to be a lot of capital outflow from the US, and this is going to have a huge weakening effect on the US dollar and on the US economy as well. And as you could look at the chart that was playing while I was talking, the US dollar is losing its value very quickly. And he says it very bluntly here. The problem has been clearly identified. It's Fed Chair Jerome Powell and the rest of the world's central bankers, he says, there's a lack of trust. And of course there's a lack of trust. None of us here in this community trust the central banks. Even the mainstream are starting to lose faith in the central banks, and people are starting to learn more and more about money print to go burr. All the memes that are going out there, they're actually doing good for spreading awareness of what the central banks are doing. And it says here, the Fed itself, in its semi-annual financial stability report last week, says it is worried about risk coming from soaring asset prices. And ever since then, we have seen the tech stocks start selling off. We have seen some weakening effects in the stock market, and it'll be interesting to see if this trend continues, or if Papa Jerome steps up on his pedestal again and starts talking up the markets again and announcing more money printing for the markets. But okay, let's dig a bit deeper on why exactly the US is going to lose its world reserve currency status, and let's look at some more data and information. So look here everyone, the IMF has a warning for investors, and we all know the IMF, the World Economic Forum, they always say things and then it seems like 6 months later or a year later it ends up happening. And let's have a look to see what the IMF chair says about the US losing its world reserve currency status. Whatever the case, Miss Georgieva's New Bretton Woods moment is a call to action for investors paying attention. The IMF is flat out insinuating that the dollar's days as king of the jungle are numbered, whether the US likes it or not. When the death knee officially sounds, it will no doubt come as a shock to the world, despite clear indicators now that this moment is nigh. Investors, commentators, and financial medias will refer to it as a black swan event. So people, we have to pay very close attention to what these world organizations are saying, because what they say does eventually come. And now they're saying this year that they want the US to contribute more to their SDRs, their special drawing rights. That's just pretty much a basket of 5 major currencies. And they want people to start using their SDRs, their special drawing right currencies. And they also want to be able to create money out of thin air like other central banks as well. So who knows, are they going to be the ones pushing for world reserve currency status? Because what did the World Economic Forum say in its Great Reset speech? It says by 2030, the US won't be the world superpower anymore. That also means the US won't have world reserve currency anymore. And everyone, look at this chart of the US dollar losing world reserve currency status. And as we can see here, since 1971, it has absolutely plummeted. And we've also seen since 1971, when they removed the gold standard, the supply, the red line of currency or US dollars in existence has absolutely skyrocketed, while the dollar purchasing power is plummeting. And so why it hasn't happened yet, we are getting very close, but let's keep looking. And as we can see here with this chart, the US reserves held by other countries have fallen to their lowest levels since 1995. So countries around the world are selling off more US dollars and selling off more US treasuries, and this trend is going to continue. And look at this chart, everyone. This is very, very interesting, because we tend to just think about time as only our lifetime. So we study history, but we really only study our lifetime history. We don't study broader history. So even though the US has been the world reserve currency for our lives, it definitely hasn't throughout history. So as we can see in this chart, Portugal from 1450 to 1530 held world reserve currency status for about 80 years. Then Spain from 1530 to 1640 for about 110 years. Then the Netherlands from 1640 to 720 for 80 years. Then France from 720 to 1815 for 95 years. Then Britain from 1815 to 1920, 105 years. And the US has held its world reserve currency for 100 years. But as we study history, what can we see the trend here? The trend is normally a world reserve currency status only lasts for about 100 years. That means the US within the next 5 years is due to lose its world reserve currency status. Okay, so now that we know that we're all doomed, and if you're living in the US, you know that your country is going to lose world reserve currency status, what can we do about it? Well, you can diversify into other currencies, but what I'm doing is, and this is not financial advice, just what I'm doing is, you may want to invest in precious metals like gold, silver, because if there is a currency reset, or if it does lose purchasing power, the US dollar going down will mean this will be good news for precious metals. Also, when the US dollar falls or when there's high inflation, this may be good for things like Bitcoin. But again, we haven't had that long chart of history, but it may just be a good idea to diversify into Bitcoin because whenever the US dollar falls, Bitcoin tends to rise. Also, other hard assets like commodities perform well when the US dollar is falling. But to be honest, if the US does lose its world reserve currency status, I think there's going to be a lot more issues and there's going to be a lot more worries about what to do with your money because we know the US isn't going to go down without a fight. So everyone, I hope this video was informative and eye-opening about how the US is due to lose its world reserve currency status. We've all seen the videos over the past 10 years about the dollar going to zero and the dollar's going to fall, but literally we've never been closer in history. And when we look at the charts of history, the US is due for losing its world reserve currency status, and we can see with all the policies and with all the fiscal stimulus from all the governments, people are losing faith in the US being able to retain its global superpower and being able to repay the debt. So for all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you up to date on the latest happening in the stock market, the global economy, and global finance news. If you're bored, I'll put up some of my other videos here. I'll see you there.